I'm joined today by my good friend Rick, even though I think we only met about 3 months ago, is it?
Yeah, a couple of months ago,
Yeah, it seems like a lot longer than that
reached
now,
out
doesn't it?
for some help. Yeah, it does. Back and forth for a while. Definitely helped me a lot with my trading journey, which I'm infinitely grateful for. Thank you very
Thank you.
much.
I like the plug at the beginning of the interview. I really appreciate that. I play that over and over again. So Rick, tell us about yourself and in particular, how you got onto this trading journey.
Sure. So, guess it started for me about 3 years ago. Mm, Total curiosity. I think I saw a video on YouTube and, just sort of started reading books, messing around with charts, thinking, well, this is easy. But I remember thinking this is easy, like right at the beginning. All you've got to do is buy when it's cheap and sell when it
Pretty
has a
sure
very
everyone goes through that.
pretty rapid end. Yeah, very quickly. And then I didn't really do much with it in terms of the one thing that I'd done, which I'm very proud of myself, is I've not really risked any money throughout my trading journey. I was just always just testing stuff until I lost a couple £100 here and there over the years, but nothing catastrophic, right? And then I've just been fine tuning strategies and just trying to work out something that works for me in the market. Because one of the things that I learned when I was like watching these videos on YouTube is everyone's giving you a strategy. Hey, follow this strategy and you will get an X% win rate. And it's very common to see this. And it's very flawed because I found that people's perceptions and how they react to the market is completely different. And I was banging my head against a brick wall for a while because I was trying all these different indicators and different strategies and all these different things, and it was just going around in circles, right? And then I stripped all that away and I just went, okay, you don't want to bother with any indicators. I just learned price action, which I'm not really there yet. I do believe price action is key. And I think that that's one of the most like fundamental things. Yeah. You understand what price is doing. The rest of the pieces of the puzzle kind of look after themselves. There's other factors to consider. So I got myself to that point, and then I felt comfortable enough to sort of put some of my hard-earned dollars into an account. Not much. I just put a couple hundred
What
bucks.
time wise? So how long was this stage after you kind of first started looking
Oh,
at YouTube videos, would you say?
2 years I was plugging away at it, really, just testing things on demo account. And I did get myself to the point where I was just not numb to the losses and numb to the wins, but to the point where I was just seeing like, okay, this demo account is at 5,000. Let me see if I can get it to 5,300 by let's say the next 3 weeks, right? And trying to like condition myself to think it was real money. And it did work because what I would do is when I got myself to that target, I'd go out for a meal or something. I'd just do something just to reward myself. So I tried to give myself a reward-based behavior for being disciplined and sticking to my rules, which I did really well with demo. I would sit there and I'd be like, no, take that trade. I'm not going to take that one. Don't want it. And then I'd put like a couple $100 in, and the psychology shift that went on in my mind was just, I don't know, it was like taking 10 steps back. All of a sudden, it was just different when real money was involved, even though it was only $200. And I didn't really care if I lost the $200, but I became like impatient, impulsive, taking risky trades. And then, I'd watch my account go from like 200 to 180, which isn't a big deal in terms of monetary value, but as a percentage,
Because all the
I
while
thought,
you're
well,
thinking about how am I going to scale this in the future? Obviously, that's what is going through your
trying
brain.
to,
So the percentages are
yeah,
important to you. The money wasn't.
correct. And I was logging every single percentage. And, it was, I had spent about 6 weeks, it was like $200, like $130. So I was like, something's not right here. Like I'm not doing anything different. My strategy is the same. What I'm looking for in the market is the same. And that's when I reached out to you. I think I saw a video with you on YouTube. And I just sort of said to myself, it's not like, it's got nothing to do with what you know or what you learn or what you study. That's like, I think my personal opinion is I think that's a small piece of the pie. I think that's like maybe 30-40% of getting it done. Right. And I think the large chunk of it is how you deal with it in your head. I came to you and I read a couple of chats, and the first one was like just illuminating a room for me. I was just like, that makes a lot of sense. And then since then, I've just been chipping away at it, and I write stuff down every time we go over something. I got it written down. Well, Jason said this. And then I go back and read over it and look at it again, and I remind myself of why I did it. And now I'm at the stage where well, hold my hands up. I'm not profitable. 3% drawdown this week, but I'm not bothered by it because I know I won't blow the account. I've taken a couple of dodgy trades that maybe the beginning of the trade was okay, but like I scaled in either too soon. This is something that I do.
So the good thing is you're at a stage now where you know when you're doing something that doesn't fit in with your rules. You've got a really good set of rules. You know your state of mind. You know you can trust yourself to put a trade on and not mess it up. But you're
sometimes
still, because there's so many moving parts to a trade, you still deviate on 80% of the trade goes well, and then you're just not quite do the last bit.
Correct. Or you take one dodgy trade and decide taking 4 steps forward, like really cautious, steady, well thought out steps over a pond, with stepping stones, and you're really taking your time. And then you see like a little shortcut to the other side of the lake and you jump and you fall in the water. It's how it is.
Because we just can't control ourselves. To remain 100% disciplined is so difficult. I mean, I can't do it. 35 years in business, and everyone thinks that I'm this gifted trader, and I'm not. I still make mistakes, still miss things, get greedy.
Yeah, and as long as you own your mistakes, I think that's fine. I'm looking at gold now, and I'm like, like, it looks like it might do something in the next couple of days, But my rule is that I place all my trades on a Monday, and I don't mess about until next Monday. So I just need to leave it well alone, no matter how tempting it is.
Okay.
That's the hardest.
So you're kind of touching on some of your rules there. Could you maybe give me half a dozen of your top rules?
Okay. Well, they've evolved somewhat over time.
Yeah.
The main one is to do with my strategy, which is basically I like to trade a reversal. So the reversal can be like at the end of a serious downtrend, or it can be a reversal on a pullback. Both of those are okay. So, once price action is reversing, I like to try and catch that little scoop, which I'm quite good at. So that's my main rule. And I try not to look at anything else. But sometimes, you see something, you're like, okay, so that's one that I'm getting better at. And that's something that I just think comes with discipline. And I'm over that somewhat by just going back in the charts over 10 or 20 days, drawing out every reversal that I've seen. Okay, here's a reversal. Would I take that trade? And then just having like a mental conversation with myself, like why would I wouldn't? That's the first one. The second one is to do with risk. So I say to myself, no more than 2% a week loss, like 2 trades of 1% or 4 trades of 0.5%. It's
you're
okay,
out.
however you respond, and you're out. Yeah. I'm pretty good at that. I do stick to that. It's okay. I have made the odd little mistake every now and again, but that's part of the course. The new rule that I'm just implementing now, which is like when I scale in, because I'm doing this quite a lot, before I scale in, I need to take something off the table, basically. If I get the bottom of a reversal, and usually I'll start with like a very wide stop, so I give it plenty of time to move. And then as it comes up, I try and put my stop somewhere inside an area below some support or something, or below an EMA.
And if you already predetermined those trail levels, when it hits this price, I will trail to this price.
Rough idea of what I'm looking for, but I am doing a bit of it. I am looking at the charts going, okay, it's moving up now. But what I'm doing is, I've been kicked in the teeth now a few times doing this, is you see it bounce out, you scale in, and then you put your stop, in an area that you think is, let's say, for argument's sake, the bottom of the flag or the bottom of the range. And then lo and behold, the candle reverses and it paints out a new range, a new flag, and you see the bigger picture and you're like, okay, so that flag's not actually 8 candles long. It's like, 24 candles long. If I'm going to scale in, fine, but take something off first. Yesterday, I was like 600 up. And then, I scaled in, I moved my stop. And instead of taking something off, I ended up like 200 down. But really, I should have been like 300 up, and then like, it's just greed. And it comes back to this idea you just need to chip away at it like slowly and not, but it's really hard to do, It's not easy.
It really is. And this is also a symptom of because you're starting to trade, because up until 2-3 months ago, you were trading demo, but now you're trying to very disciplinedly, if that's a word, build a small account. I like that you're doing that, because I know that you could afford to do a much bigger account, but you're being realistic.
I think it would crush you if you lose a lot of money.
It does. And the problem is, so many people come to me, I hadn't heard about you, and then I started really looking for someone to help me because they've got themselves in a mess. I don't market myself very well, so people have to dig me out. And that's when they say, oh, it sounds like you actually really know what you're talking about. And I really need your help because I've gone and lost. And oh my word, it's 5-figure sums, 6-figure sums, family money. And I'm just thinking, wow, when you lost like $1,000 or $5,000 or 10 grand, why were you not thinking, I don't know what I'm doing, I better stop? They just kept going. So your approach, I would definitely recommend. When you feel confident and you've done 100 trades, you've got a good sample size, you can say, okay, I've got a 55% win rate, and the main thing is I really can put a trade on and I can trust how I'm going to react.
Yes. And that's another thing, that when you do take a big loss, it damages your ability to then go back into the market again. Because when your play plays out, you question yourself and you're like, should I take it? The last time I took a trade, I got stopped out. Whereas if you just lose like $20, you get over it pretty quickly, right?
So that's actually a good way to build that 100 trades sample size. I guess what you're saying is your objective at the moment is not actually to make money. It's to build a system, build your strategy.
Yes, correct.
And build your mental strength as far as trading goes.
Build mental strength. That's a key one. I think that's more important than the strategy. It's almost like a rubber band. Like I'll have times when I put on like a good trade and I'm not winning like a load of money, but I have moments where literally you feel like you're on top of the world. And that emotion is dangerous, because then if you sit down at the market and you go, let me see what the dollar Swiss is doing. Let me see what the British, and that's just as dangerous, right?
Because you're not letting the trades come to you like you were before. So you're trying to search something out that may not even be there.
Yeah, that's happened to me plenty of times. I've sat down and planned something. I've looked at it. It's gone great. It's been well executed trade. Hit everything. So there's two sides of the coin. I think like the emotions on both sides, like the negative emotions, dangerous from, the warning signs, and the positive emotions are like warning signs as well. And you have to get to that stage, a rubber band, where even when you're stressed, to really move, you have to just stay in your lane and just keep going on.
Yeah, you've got a good way of explaining things. When you do a bad trade, or say you have a series of bad trades and things are going really bad. I know I've done this in the past. I don't do it anymore. But that's when you go for the revenge trade and you think, oh, sod it. I'm literally going to risk everything in my account on the next trade. It's everything or bust kind of thing. Or at the other end of the scale, when you're doing well, then you're like, yeah, I'm gonna step it up now. I'm gonna risk 10% on the next trade, and you get greedy. So
I don't think anyone needs to blame themselves when they do it, because we all do it, right? And anybody says they don't do it, I think is probably not being entirely honest. But it's just recognizing it, and it takes time to build that muscle memory. Like I have sat down before, I'm like, yeah, it's gonna reverse soon, and then I just went for a walk and I just counted to 10. I was like, do you know what? There'll be another reversal tomorrow, and you can just leave it and get the next one tomorrow. You don't really have to work for your money. There's this false economy in the sense that like you're being given money for just pressing a couple of buttons.
Feels like you're not earning it.
Yeah, I think so. So yeah, it's coming back to the rules. That's one thing. And then the other thing I do now is I do my TA on a Sunday, and I like literally print it out. And then I just place my trades Monday morning, either like, 9 o'clock, 10 a.m., something like that. So I feel happy that way because I can run much wider stops. And I can slowly bring them in as the trade goes in my direction.
You'll close out by Friday at the latest?
Try to, yeah. Sometimes if it's looking okay and it looks steady, I have left over the weekend, and I'm okay with that.
Will you have probably scaled out of some of the position already and banked something, and you'll just be thinking, I can afford to run the rest. I think I'm right. Got my stop in. I'll take the consequences.
Yeah. Because what I don't like is when you're in on the 15-minute candles, even the half an hour candles, by the time the US opens, things can just go up and down like so quickly.
When we first started talking,
I was doing that, yeah. And it was working. I was getting 7R.
I was blown away with that.
I was doing really, really, really well. But you know what? I'd finish at like 10:30 and be like,
so you're exhausted. It's hard work.
Yeah, it was like,
so
like
really were earning your money then.
It might be a strategy that I revisit or bolt on to another strategy later on. I might say, twice a week, let's say Tuesday and a Thursday, I'll do the 15 minutes, and I might just risk like 0.25% or something like that. I can try and see if I can get 6-5R. But
if you make the same money, you almost feel like you've stolen it because you're not putting the effort in now that you were before, but you're still able to make the same amount of money.
Correct. And also, even though my R was higher trading, at the open on the 50 and 30-minute candles, my win rate was a lot lower. Right. So, I might get stopped out like twice, maybe, let's say. So I've already lost.
Yeah.
By the time I get my 6 or 7 hours, yeah, it's great, and you pat yourself on the back. But are you really up that much by the end of the day? Probably a little bit more. Whereas if you sit down on a Monday morning, place your trades in, run up till Friday, and you've got 2%, 2.5% for the week. That's great. You haven't done anything. You've been paid to do nothing.
You've done 2 or 3 hours work probably the whole week.
Yeah. Basically 3 hours on a Sunday night, and then Monday morning, just put the
Yeah, that is the thing about trading. It doesn't necessarily pay you more. The harder you work doesn't necessarily mean you earn more.
And it's like almost everything's almost the exact opposite of what you want to do. Like I say, when you trade well, you want to keep trading. When you trade badly, you don't want to trade. Well, I would say when you do trade badly, by all means take a break, but there's nothing to stop sticking to your plan and taking the next trade that comes along. So it is difficult. I've written down on my wall, and I might look at them every now and again, but sometimes I just sort of like, I might ignore that rule today. After just like glance over it. I will stop lost it. I might just ignore that one today,
Yeah.
So it's difficult, and it's all psychological. And it was the hardest thing to find somebody that could help with that, though, on YouTube. There are zillions and zillions of videos about the next best strategy that will help you do this and do this and do this. And it's a load of rubbish, right? Some of them are great. Yeah. But to find somebody that can really because you have experience, you've done it for 30 odd years, right?
35. The problem is I've made all the mistakes. And on the trading floor, you couldn't stand in the pit with a book. There weren't many books anyway, of course, back in 1990. About trading or floor trading. There wasn't any books because floor trading in London was only, 6 years old by the beginning of the 90s. So you were thrown in the pit and you didn't really get any training, and you either worked or you didn't. And obviously 90% of people didn't, pretty much like screen trading. I think 90% of people don't make it. And then when we moved to the screens at the beginning of the 2000s, I had to learn all over again. Everything that I knew about trading in the pit was redundant. I was 30. I was thinking, that's my career over. I don't know how to do this. All over again. And again, there's no books to read because no one ever had traded on a screen before. So now, after all those years, I have now got this set of rules, which, as you know, I enjoy having the chat with you. And
not a plug, but I would encourage anybody who's having any kind of, if they've got their trading to a certain level, and, I would say if you're a complete beginner, go and study something first and get a little bit of experience. But when you get to that stage where you just want to talk to somebody who understands what's going on through your head. Yeah, very, very, very useful indeed.
You actually helped me process all of that, in fact, because I've written all the rules down in it, but I never really sat and taught someone. And, I got quite excited during our conversations. And then you sent me all those notes, and I've stolen some of your phrases, like your mental capital and your clean trade.
Yeah, that's a good one.
Well, I've gone and written a 5-day challenge now, which I'm going to be releasing next month. You'll be the first one to get it. But to be fair, a lot of the material in that is stolen from our conversation.
It was very beneficial. Just understanding what's going on in your head and being able to realize when you're making a mistake. That's the hardest thing, I think, to be able just to say, no, that's not going to work. And then what was the rules? Those are the core ones, basically. And fear obviously comes on the other side of the coin of greed, in the sense that I do try and instill myself, if you have a loss, don't take it personally. Your equity curve is not going to be a straight line up, right? It has to have some retracements, much like a chart, right?
Exactly. I was going to say, it looked like a typical bull trend.
Yeah, exactly.
with several corrections.
With several corrections. Yeah. A couple of weeks ago, I was up, and then I had a bit of a flat week, and then, you just got to take it on the chin and just sort of keep going at it. And I think it's also difficult if you putting a lot of things into the trading basket as a means of financial stability. For example, I do have my own business, so I am kind of self-employed. I do my own thing. And don't get me wrong, I'd love to fire everybody in my office and just trade on a Monday and be done for the week. It's not going to be a reality anytime soon, but it may happen in the future. And I think it's important. Sorry
to interrupt you, but do you think that your business background, because you've got an international business background, you're very experienced. Do you think you brought discipline and focus from that?
I'm a bit of a hound in the sense that when I get sent or something, I don't really want to give it up until I've got my teeth into it. I lived in China for 12 years, and I think I learned more about life in 12 years there than I'd probably learned anyway. It's real, cover your teeth and get on with it or die.
Sounds like going into the trading pit. You're really gonna...
Yeah, it was really brutal.
Yeah.
So that definitely, that definitely helped. But for me, I'm driven by the structure behind trading. I have my business, we have a structure and we have a flow and we follow it. And if we follow it, we get orders in. If we don't follow it, we don't get orders in. We have a manufacturing business. Whereas like it's the same with trading. It's like it's input a load of stuff and some of it will come out. And as long as you follow the steps, you should get out more than you put in. You should get a return on your investment, right? Basically. And your investment being your time and your brain. I do have moments where I'll look at a chart and go, God, I can't do this. I can't see the wood for the tree.
I think it's important that you recognize that and then say to yourself, do you know what? I haven't got a clue what's going on today. And just I'm just going to walk away, come back tomorrow, get some clarity.
And that comes back to the TA thing as well. Like I think TA is really subjective. And I think it's everybody's vision. The way that everybody views the market is totally different. And that's what makes trading because, you know, the reason why my TA is different from your TA is the reason why I make money and that person doesn't make money, or that person makes money and I don't make money. You know, we can't all be right at the same time, right? So I'll look at some of your levels in the Telegram and I'll look at them and I'm plotting the chart. I can't see those levels, right? And then I'll check it on a Friday. Oh, yeah, well, it worked. But obviously that's your TA. That's what you've seen and how you've done it. Not to say you're wrong or I'm wrong or you're right. Obviously, you've got way more experience. So I would hope that your levels are good, and they are, right? But it's being able to accept the fact that like nothing is perfect, like all of the time. And sometimes what you see, somebody else won't see.